Good afternoon. Good afternoon. My name is Shillyboy. Thank you so much for listening to me. And today I want to have with you, as usual, where I look into what caught my attention in the week. And yes, particularly what question caught my attention from my clients. Now, let me get into it. So let's give a scenario where so-called Mr. X, he comes to Shillyboy and says, Shillyboy, I got a promotion. And I say, congratulations. And he says, listen, as a result, I want to move closer to work because the work responsibilities will probably require me to travel and also will require me in the main to work long hours. And then I wouldn't want to be traveling such a long distance going home. And equally so, I want to be able to drop my kids nearby work and quickly get into the office on time. I say, I think that is a good idea. I said, but why? Why are you telling me all these? He said, okay, I'm thinking of looking at buying my second property. And instead of me selling the existing property, I'm thinking that I rent it out, maybe who knows, use some of my money to take care of my mother. I'm like, actually, you've got valid commercial reasons or personal reasons that you want to look into. However, he asked me, what would my tax implications be? I'm like, it's actually a very interesting question because it can easily be considered in terms of income tax alone, but not also considering the change of use of your primary residence. Maybe let's unpack where I'm referring to. You will agree with me that if Mr. X were to sell this primary residence today instead of renting it out, he will more likely be entitled to exclude any capital gain from disposal of that particular property up to 2 million. Agreed, right? So in this case, he's not actually doing that. He's actually saying, instead of selling, I'm rather going to rent it out. Now, the implications of that is, if let's say Mr. X down the road, say 5 years, 10 years down the line, he intends on selling this particular property, would you agree with me that in the total period, say of 20 years owning this particular property, he did not exclusively hold it as a primary residence? As a result, that 2 million that we're talking about will not be applicable on the whole capital gain at the date of disposal of this particular property. Would you agree with me? So now, can you see that there are potential commercial reasons on why Mr. X needs to do a proper portfolio restructuring at the date that he intends to change the usage of this property? And this is why in the main, I always have this conversation with property investors in the main to say, listen, maybe you might want to consider moving this property in a proper structure, whether be it a trust, especially that you want to take care of your mother, right? Or even the little ones that are going to be going into more expensive schools, more extramural activities that they will be doing while they're waiting for you to be working those long hours. And he said, but what do you mean now? So what are the tax implications for me to be moving these properties? Where do you even want me to move? I'm not even supposed to be having companies at this level of my work because it's going to be requiring too many disclosures and things like that that I wouldn't want to be dealing with with HR. I'm like, maybe who knows? You might consider to have a trust because in the main, the money that you are generating from this rental income is exclusively going to be looking after your mom. Maybe you want to make your mother a beneficiary of this particular trust that you're moving into. Now, what it then does this, it gives us opportunity to actually transfer this property into the trust and take advantage of the capital gain while locking the growth of these assets in the trust. Or for that matter, if he's not actually in this case, let's say maybe we flip the coin, he want to grow this business, or he's not actually also over and above looking after his mother, but he wants to grow this portfolio as it goes along, as he getting all those bonuses from this fancy and expensive or more responsibility job title. He wants to grow side hustles in terms of more properties. I said to him, listen, maybe you want to consider, because sometimes you want to retain this money and not distribute it. Maybe consider a company in this case, because in comparison, you're already sitting at a higher marginal tax rate. So it might not be ideal to keep this property in your personal name. Can you see that's another consideration that Mr. X needs to consider in deciding and wanting to choose or change the usage of this particular property? Now, as I proposed to him, maybe he needs to consider a company. And we can flip this and move it into the company and immediately take advantage of that 2 million exclusion that I earlier on elaborated on. So that in that case, he doesn't disadvantage himself in the future. So now, once we are done with that process of transferring that, would you agree with me that had Mr. X actually retained this property with him with higher marginal tax rate and the rental income coming in this case, his house is paid up, would you agree with me that he's sitting on a higher taxable income as a result of that rental income? And then in the main, because of his higher marginal tax rate, then it means he will be liable for taxes at the higher marginal tax rate. That is not a sound decision making. But if he then do a proper restructuring and he transfer this property, because it's not a primary residence, he just move it into the company. If he doesn't want to complicate his life, he can just simply have a one company and transfer this property. We can tax plan it, the whole thing, transfer the property. And then what? Then the net rental income is being taxed at what? Applicable tax rate for corporate tax, which is about 28% as it stands, right? So now that on its own, can you see we effectively reduced potential income tax that he would have potentially going to pay had he left this property in his personal name. Now, but he further asked me, but what over and above tax? Because tax can always be the main consideration on why people do restructuring. What could be other reasons, Shillyboy, for me to do all these hassles and for me to even have a company that I must worry about compliance on an annual basis? I must worry about you doing financial statement or management accounts on a monthly basis. I'm like, okay, we are capable, tax aid is capable of doing accounting for you. Well, Intergen is capable of being all those wealth management for you. But what we can actually provide for you is the fact that having a company comes with all the commercial reasons. One being central management. You don't have to be the one running the company. You can actually even appoint someone who runs these properties if we're going to have opportunity to be building this portfolio on an ongoing basis. So you can centralize the management. You know that you ultimately take decisions, but there are people under you who actually makes decisions. Unlike where the properties are sitting in your name, it doesn't give you that opportunity to build the central management. Would you agree with me? So one of also further on with over and above the central management of this, it helps with succession planning. You might think that, no, I'm just buying 1 or 2, 3 properties. But in the main, the reality is that you want continuity. You want upon your death to ensure that there's someone who inherit this and the business can keep going instead of being disrupted where we have to do proper change of ownership and things can actually be misappropriated or things might not go smooth or can be delayed and causing a loss of wealth during that process. But business and company allows us there to have that continuity. And then as a result, the succession planning can actually in the main be more efficient. It's easier to transfer shares as compared to transfer actual properties from one person to the next person, because with shares, we can easily just change share certificate and we move on. But with actual properties, then we need to involve the legal transferring attorneys where we have to entertain the issues of deeds offices. But who knows how long that could take, right? So that is one element from commercial reasoning point of view why Mr. X should, in fact, from now consider transferring this current primary residence into the company, or for that matter, in a more efficient structure that involves trust, right? Further to that, like I elaborated also earlier on, it could be tax issues, because it's not ideal for him to be paying that unnecessary 45% or 40% as compared to where he can take advantage and pay about 28%. He can have to consider that, especially that he's going to move these properties in terms of rental properties, right? So those are some of the things that we can argue over and above with the fact that now he has more tested and trial tested legal framework that the company will be playing under the likes of Companies Act, the likes of CIPC. He can hire people in the main, right? And then he can even involve creative financing. In that fact, he can even raise more capital within the company structures and take advantage of things like group taxes that can potentially be out there. So in the main, he stands a chance to create more wealth efficiently and easier using company than using his personal name. With that, Mr. X, I think I consider you, I give you homework to actually think on, say, how do I then move these properties into the structure that will allow me to grow, will allow me to optimize my financial position, will allow me to actually even pay more lakhs legally so, or in an efficient manner. And for that matter, will allow me to have a continuity of my wealth to the next generation. We all speak of generational wealth, but what does it take to actually get that generational wealth and position it to the next level? Mr. X, I hope you are able to make an informed decision after having listened to this, and all the best. If you need help, you know where to reach me. Good luck, Mr. X.